Who are the most successful traders of all time, and what can you learn from them? While there are many contenders, I've put together a list of some of the most famous and influential traders in history. These individuals not only achieved great financial success in the stock and forex markets, but also made important contributions to the field of trading as a whole. By studying their methods, strategies, and philosophies, you can gain valuable insights into what it takes to succeed in this challenging but highly rewarding business. 1. The life and tragic end of Jesse Livermore, the legendary trader who mastered market trends, overcame losses, and shorted his way to millions. Jesse Livermore was one of the most famous and successful traders in history. Born in Massachusetts in 1877, Livermore left school at the age of 14 and began working in a brokerage firm. He quickly discovered a talent for trading, and by the age of 15, he was trading stocks on his own. Livermore's natural instincts and ability to read market trends and dynamics soon earned him a reputation as one of the best traders on Wall Street. However, his success was not without its setbacks. Livermore experienced several major losses throughout his career, including a significant loss in the 1907 market crash. Despite the losses, Livermore never gave up. He continued to work on his trading methods and strategies, and in 1929 he made one of his most famous trades. Sensing that the market was headed for a crash, Livermore shorted the market and made millions in profit as the market collapsed. Livermore continued to trade successfully throughout the 1930s, but his personal life took a turn for the worse. He suffered several personal losses and began to struggle with depression. In 1940, he committed suicide at the age of 63. Livermore's story is one of success, but also of the dangers of overconfidence and the importance of risk management. While his ability to read the markets was legendary, his willingness to take on too much risk and trade on margin eventually contributed to his downfall. Nevertheless, Livermore's legacy lives on as a testament to the power of determination, resilience, and a deep understanding of market dynamics. The lessons from Jesse Livermore's story. 1. It is possible to achieve great success in trading by cultivating an intuitive understanding of market trends and dynamics, combined with persistent practice and study. 2. Even the most successful traders can experience significant setbacks, so it is crucial to manage risk carefully and never become complacent. 3. Overconfidence and excessive risk-taking can lead to financial ruin and personal troubles. 4. Trading on margin can magnify losses and gains, and traders should know how to manage this risk. 5. Despite the challenging twists and turns of life, resilience and a willingness to adapt can lead to success and a lasting legacy. 2. George Soros, the trader who made $1 billion in one day with bold bet against the British pound. George Soros is widely regarded as one of the most successful investors and traders of all time. His story is one of determination, patience, and a deep understanding of market trends and dynamics. Soros was born in Budapest, Hungary, in 1930. He moved to England in 1947 and attended the London School of Economics, where he studied philosophy and economics. After graduation, Soros worked for a variety of financial firms before starting his own hedge fund, Soros Fund Management, in 1969. Over the years, Soros became known for his bold and sometimes controversial trades. In 1992, he made a particularly audacious bet against the British pound. At the time, many traders believed that the pound was overvalued and due for a correction, but few were willing to bet against it. Soros, however, saw an opportunity. Soros and his team at Soros Fund Management began selling short the pound, meaning they borrowed large amounts of the currency and sold it in the hopes of buying it back at a lower price later on. As other traders began to follow suit, the pound began to fall rapidly. Soros kept upping his bets against the pound, using the profits from his earlier trades to fund increasingly larger shorts. On September 16, 1992, known as Black Wednesday, the Bank of England was forced to withdraw the pound from the European exchange rate mechanism, causing the value of the currency to plummet. Soros had timed his trades perfectly and made more than $1 billion in profit in just one day. Soros's legendary trade made headlines around the world and cemented his status as one of the most successful traders of all time. However, Soros has also faced criticism for his aggressive tactics. Nevertheless, his story remains a testament to the power of market knowledge, risk management, and determination. There are several lessons to be learned from George Soros's story. Here are a few. 1. George Soros's billionaire status resulted from years of skill development and a steadfast commitment to learning. 2. His success was rooted in his profound understanding of market dynamics, enabling him to capitalize on opportunities like betting against an overvalued pound. 3. He strategically diversified his portfolio and used profits from earlier trades to minimize risk while maximizing potential gains. 4. Soros, against the crowd bet on the pound, showcased the potential rewards of contrarian thinking, though it comes with inherent risks. 5. Soros' ongoing success was fueled by a commitment to studying market trends and experimenting with new strategies, emphasizing the importance of staying curious and adaptable. Number 3. The remarkable journey of Paul Tudor Jones, from college curiosity to legendary hedge fund manager and philanthropist. Paul Tudor Jones is a legendary hedge fund manager and philanthropist who has significantly impacted the world of finance and beyond. Jones was born in 1954 in Memphis, Tennessee, and became interested in financial markets during his college years. After graduating, he worked as a clerk on the floor of the New York Cotton Exchange, where he learned the ropes of commodities trading. Jones quickly made a name for himself and started his own hedge fund, Tudor Investment Corporation, in 1980. He became known for his macro trading strategies, which involved analyzing global economic trends and taking large positions in various markets. Jones achieved considerable success with his fund, generating impressive returns in both up and down markets. He also actively supported philanthropic causes, particularly in education and homelessness. One of the most notable events in Jones's career was his prediction of the 1987 stock market crash. He foresaw the impending crash and positioned his fund accordingly, making significant gains as other investors suffered losses. This feat cemented his reputation as a brilliant trader and propelled him to even greater success. Throughout his career, Jones has stressed the importance of risk management and discipline in trading. He has also advocated for social responsibility in the finance industry, using his wealth to support various charitable organizations. Jones's story is a testament to the power of a strong work ethic, a willingness to take risks, and a deep understanding of global economic trends. Despite his considerable success, he has remained committed to giving back to his community and using his wealth to make a positive impact in the world. The lessons from this story of Paul Tudor Jones are many, but here are my top 5. 1. A strong work ethic and a willingness to take risks can help greatly in achieving success, as evidenced by Jones's success in the finance industry. 2. Analyzing global economic trends can provide an edge in trading and investment decisions. 3. Risk management and discipline are crucial in trading and investment, with Jones himself emphasizing their importance. 4. Philanthropic causes can benefit greatly from the wealth and success gained through hard work and perseverance. 5. Jones's ability to give back to his community and make a positive impact in the world serves as an exemplary model for others to follow. 4. Stephen Cohen, the aggressive trader who shaped Wall Street history. Stephen A. Cohen is a hedge fund manager and billionaire investor who is considered one of the most successful traders in recent history. Born in New York City in 1956, Cohen attended the Wharton School at the University of Pennsylvania before landing a job on Wall Street in 1978. After working at several investment banks, Cohen founded his own hedge fund SAC Capital Advisors in 1992. The fund quickly grew and earned a reputation for its aggressive trading strategies and willingness to take risks. Cohen became known for using a combination of fundamental and quantitative analysis to identify mispricing in the market and taking large positions in companies that he believed were undervalued. Over the years, Cohen's fund generated significant returns, and he became one of the wealthiest people in the world. However, his success was not without controversy. Several of his traders were charged with insider trading, and in 2013, SAC Capital Advisors pleaded guilty to criminal charges and agreed to pay a record-breaking $1.8 billion fine. Despite the legal troubles, Cohen continued to manage money and started a new firm, Point72 Asset Management. Today, he is still considered a major force in the finance industry and a highly successful investor. The story of Stephen A. Cohen teaches several lessons. 1. Taking calculated risks can lead to significant financial success. 2. Using a combination of fundamental and quantitative analysis to identify investment opportunities can provide an edge in the markets. 3. Highly successful investors can face legal troubles, and as such, every trader should take steps to ensure compliance with legal and ethical standards. 4. It is possible to bounce back from any kind of trouble as a trader, as evidenced by Cohen's ability to start a new firm and continue his success in the industry. 5. Richard Dennis, the commodity trader who proved anyone can learn to trade. Richard Dennis was a commodity trader born in Chicago, Illinois in 1949. He started his career at the age of 17, trading soybean futures on the Mid-America Commodity Exchange. His trading skills quickly developed, and he became known for his aggressive trading strategies and risk management techniques. In the early 1980s, he set out to prove that anyone could be taught to become a successful trader. He believed that trading was a skill that could be learned and developed, rather than an innate talent. Along with his partner, William Eckhart, he recruited and trained a group of traders known as the Turtles. The Turtles were taught a specific set of rules for trading, including entry and exit points, risk management, and position sizing. The rules were based on technical analysis and were designed to take advantage of both long and short-term trends in the market. The Turtles were highly successful, with many of them going on to become successful traders in their own right. Dennis's experiment proved that trading could be taught, and his techniques are still used by traders today. Dennis retired from trading in 1988 and became a philanthropist, supporting causes such as education and the environment. He passed away in 2018 at the age of 70. The story of Richard Dennis teaches several lessons. Firstly, trading is a skill that can be learned with the right training and discipline. Secondly, having a set of rules and a well-defined strategy can improve trading performance. Thirdly, risk management is crucial in trading, and controlling risk can improve long-term success. Finally, giving back to the community can be a fulfilling way to use success to make a positive impact in the world. Trading is not just about making profits. It's a journey marked by challenges, setbacks, and triumphs. As you navigate this complex landscape, let the experiences of these remarkable individuals inspire and guide you toward your own achievements in the world of trading. Beyond the stories of highly successful traders, I personally have faced setbacks as a trader, blowing multiple accounts and almost giving up on life itself. I shared my story in this video. I recommend you watch it. It might inspire you. If you made it to the end of this video, well done. And if you found this video helpful, please click the like button, subscribe to the channel, and turn on the notification bell so you don't miss it when I drop videos like this in the future. Thanks for watching.